Good afternoon. It's Julie. It is Thursday, January 25th. It's about 3:45 p.m. Chicago time. Markets are closed, and the kumbaya from the algos behaving is over. I've got to tell you, every algo for itself today, and the markets were very choppy, albeit a few were directional, but the majority of the markets were flat. So after a big move day like yesterday, today was the inside churn day, and you had that in the indexes. But let's look at a couple of the outliers. You had gold to the downside with silver. Copper came off a little bit, and so did crude. To the upside, you had at first you had the 6E, and then it settled on its close, or right where it started. Basically, we'll take a look at the 6E because of the um, euro interest rate decision and continuation of QE that was just announced. And the bonds were reverting back to their means, which caused them to rally up. But basically, it was just a flat to off day inside yuck rotational trading day. So let's take a look at the 6E, and then we'll take a look at gold, because gold had a late afternoon rally. Someone flicked that switch, and I'll show you where the range extension was on the gold market. But here we started with the interest rate decision this morning, and we had no price action to trade at all at that announcement up until the time when Mario Draghi started talking. And still, after 5 minutes or so of his speech, everything was fine up until 7:35, 38. He said a couple of things. He said, we are not going to raise interest rates for the foreseeable future, and we are not going to end our QE program at all for the extended future. We do not foresee ending it. We're going to continue with our buying. And the market just shot up like a rocket. um, he needs to get a lesson from Munchkin, Steve Mnuchin, excuse me, Munchkin, sorry, Mnuchin, our Secretary of Treasury, to learn how to jawbone the currency down. But where it really took off, like the hounds were being released from Baskerville, it was because he said that he's not going to interfere with the spot forex currency market. He doesn't want to manipulate or devalue the currency. And so it just took off. I mean, it's like, oh, okay. And the algos just all went long. So eventually, I think they got the message out and that they wanted. And so it came back down. And so here we ended up closing right back really where it started the day at. So the euro had a great up and down day if you were trading the euro today, and were lucky enough to get your levels and understand that that rollover was occurring. The tops are hard to trade, but once it did roll over, and this is what I look for, and it was late in the afternoon after lunch, usually when the euro is flat and not trading at all, this is when it decided to go directional again. And so you get beyond your value area, and so that you can take those inflection shorts at that time. So very good. The trades were late in the afternoon on the euro. Otherwise, you had to trade the inflections long earlier in the morning, and stay out of the rotation down. So let's take a look at gold, because gold was also a market that provided a great move, but it was late in the afternoon. Usually when people stop looking at gold, gold stops trading at 12:30, and look at this rally. 1 o'clock, 12:45, it just, took off to the downside. So this was yesterday, a nice rally up, and then here it is the next day, and it came really deep into that trade. So now it's flattening out. So here was your setup where it finally rolled over breaking this pivot low was your signal right here, and there was your trade if you were sitting there waiting for it at 118. So, and it went all the way down to S3. So a very nice late afternoon surprise for the gold traders. And so that's all I have for you today. Otherwise, try to capture the trades in the direction that they are moving. Keep your head out of it where you think it should be going, and just let the signals take you there. This is Julie, J Auto Trading Strategies. Come join us in the trade room. Thank you so much. I'll have a blessed day.